Okay, so what kind of situation do we currently have on gold? Now, clearly from the monthly time frame, as we have already said in our previous analysis, the market has clearly created a huge impulse to the upside that went to create all-time highs above the high that the market had provided in 2011. And after that, what did the market do and what we expected the market to do? We expected the market to give us a retracement, which is exactly what the market is currently doing. Specifically, what did we say also on the weekly? On the weekly, we said that clearly the market is overextended to the upside and we expect a retracement. And that is what the market is currently doing. In fact, the market created this huge drop last week. Now we still have few hours to go before this weekly candle will actually close on Sunday, so today. And it would be great to see for the last hours the market go a little bit higher, because if the market will go a little bit higher, then what will happen is that this weekly candle will be a candle that has the wick which is the same size of the body, and that brings a very good opportunity, because as you know, when you have a candle which has a wick that is more or less the same size of the body, most of the times you expect the market, and you will see the market on all time frames, fill in that wick. So it would be great to see this weekly candle have this shape, because at that point we expect the market to fill in this wick. Now, why do we expect this in the first place? The reason for which we expect it is because this wick is simply a retracement on lower time frames. So if on the weekly you see a candle with that shape, on lower time frames, aka for example the daily, you will see an impulse, a correction, and you expect the continuation to the downside. In fact, if we go down on the daily, what we can see? We can see that we have an impulse, a correction, and we expect a continuation to the downside. Specifically, why has the market already found resistance at this zone? Because in all this impulse to the upside, there is one candle which is not related to the move, which is exactly this red candle, which is a strong supply area at the moment for this market, since the market is approaching it from the downside. So previous support, turn resistance at this area. Now, before I show you how we'll be approaching the situation that we currently have on gold with students, let's first go and give a quick check at what we have on gold if we check this COT data. So the commitment of traders, which is what the biggest banks and institutions are currently doing on gold. Now, what we can see is that with the last report, clearly institutions have started taking a lot of profits on all the longs that they had. They had massive longs in all this huge move to the upside, and they now closed 14K long positions. So a massive amount of longs getting closed, bringing net positions at 224K. And what we can also notice, however, is that institutions haven't added any shorts. So it seems like they're not interested in the short in the long term, at least as it seems right now. So they haven't added shorts. However, they closed a massive amount of longs, and obviously the market dropped, because if you're closing a long, you're actually shorting. Now, if we go and see what is the situation on the 4 hours, what we can see. On the 4 hours, we can clearly see that the market is still bullish. So the market can and should continue to the upside, and it can easily break above this structure. So can we be looking for a short immediately right now? Obviously not, because first of all, as we have already seen, institutions still didn't add any shorts. Second of all, the market on the 4 hour is clearly